Well, folks, it's been one of those days. I know you can't see it, but in reality, this is about the fourth or fifth time I've tried to film this video because I'm having some sort of technical issue. So maybe, I don't know, my fifth time is the lucky charm, but I need to film it and I need to talk to you guys because there's so much going on as we're heading into the final trading week of May. At this point, the bulls were in control, and then all of a sudden over this past week, the foundation of the market got a little bit more rocky, and it's for good reason. And we have so many things to talk about. President Trump recently ignited the trade war, which is putting particular pressure on Apple. Internal to the US, we have our own political drama with the big beautiful bill, and that's going to have a huge impact on the market as well. And then from there, we have seasonality to talk about. We have an individual ticker by the name of Tesla, TSLA, which I personally believe is about to rocket because we got some news on that. And then there's many things in between that we should be prepped up for the final trading week of May. So obviously, I very much hope you're watching this video in time because we have a lot of pertinent information to get to. But before we do, don't forget to like, subscribe. Of course, if you enjoy these type of market breakdowns, don't forget to share it with a friend and all that good jazz. But with that being said, let's rock. So to have a better understanding of where we're going, we have to kind of look backwards. When the market closed on Friday, May the 23rd, here was the headline. Dow slides 200 points, S&P 500 tumbles for a fourth day after Trump threatens tariffs on the EU and also Apple. So here's a look at the overall market. This is the weekly chart. You could see red week giving a little bit back, but really not that bad. Going to the daily chart, you could see we had 4 red days in a row. That was a little bit brutal, but overall, from the low that we recently had, we are currently up 20% from that point, but from the all-time high, the market is still currently down about 5.6%. So yes, a little bit of red, but overall holding the recovery nicely. So the question here is, why did things get rocky this past week? Well, we got to look at what's going on with the trade war, or I should say the reignition of the trade war. Trump threatens new tariffs on the EU and Apple, reigniting trade fears. So technically, this first started with Apple, then it got over to the EU. I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the US will be manufactured and built in the US, not India or any place. If that's not the case, the tariff of at least 25% must be paid by Apple to the US. Thank you for your attention on this matter. Obviously, this kind of goes without saying, but when you're talking about the world's largest company, the tech behemoth Apple, well, when you get that announcement of costs just increasing, not so good for the company, but because it has such a weight in both the S&P 500 and the NASDAQ, when Apple gets clocked, so does the overall market. But then as a side point, I think this is just an interesting question. What would that do to the cost? Here's how much a made in the USA iPhone would cost. One analyst estimates that on labor costs alone, an iPhone made in the US could cost 25% more than it does now. Another analyst pegged the price of a US made iPhone at $3,500. If it does go that way, gonna be pretty brutal. And now with respect to the EU, President Trump is not happy. The European Union, which was formed for the primary purpose of taking advantage of the US on trade, has been very difficult to deal with. There are powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit with the US of more than $250 million a year, a number which is totally unacceptable. Our discussions with them are going nowhere. It was that particular line that when the world read it said, uh-oh, and that's why in pre-market trading on Friday, everything started to dive. Therefore, I am recommending a straight 50% tariff on the EU starting on June 1st. There is no tariff if the product is built or manufactured in the US. Thank you for your attention on this matter. And it was really the 1-2 punch of Apple and the EU of why we had a rocky start to the day for the overall market. By the end of the day, the SPY was still down 0.7%, the Q's down 1%. The craziness going on with the big beautiful bill and really yield spiking and bond dropping, that actually caused Bitcoin to hit a new all-time high of 112,000 as I'm filming this, trading at 107. And then obviously Apple here, because of the Apple specific news, down 3%. So looking at the larger S&P 500, you can see quite a bit of weakness in the tech sector. Obviously Apple blood red, but it wasn't the whole market. We do see some greens in certain fields such as like utility. So not completely bad, but also not good. So that's everywhere of where we've been last week, specifically Friday. The real point in this video is potentially where are we going, and every single day of this upcoming week is probably gonna be a wild one. So first of all, as I'm filming this, Jerome Powell, chairman of the Fed, is speaking. Pay attention to whatever he does or doesn't say. That leads us to tomorrow, where the equities and options market is going to be closed in observation of Memorial Day, but yet we're still going to get political movement. Senator Johnson predicts he has enough Senate allies to hold up the big beautiful bill. Folks, I am not a political strategist or commentator or anything. I don't know which way that's going to break. I don't know if it's more likely that it gets passed and then Trump signs it into law, or if it's going to not pass for whatever reason. I'm just saying you got to pay attention to it, and it's going to make the half day in the futures market and then the reopening pretty crazy. And then that leads us to Tuesday, where we get consumer confidence. On Wednesday, we have the FOMC meeting minutes. To be clear, that is not a new FOMC meeting. It's just the details of the last FOMC meeting. And on Wednesday, we also have a big earnings by the name of NVIDIA, just the biggest semiconductor company. On Thursday, GDP report, as in what's going on with the economy, expanding, contracting, staying steady. And then on Friday, that leads us to the all-important PCE inflation report. So as I said, every single day of the upcoming week is gonna be an important one. Now, if you're in the bull camp hoping for a recovery, I have some good news. If you're in the bear camp hoping for that downside gap fill, well, you might want to skip this part of the video. Over the past 30 years, the past 3 decades, the final week of May has favored the bulls. You can see this seasonal uptrend. Now, remember, seasonality is not the end-all be-all, especially when you have binary data drops, announcements. You never know when you're going to get something about the trade war. So, of course, that might really rule this invalid, but I just want to let you know from a seasonality standpoint that the bulls do control it. Check this out, macros.locals.com. This newsletter is 100% free. It's always been free, always will be free. I give you a breakdown of what's going on in the market, what to pay attention to, the earnings, as I alluded to before. NVIDIA is going to be reporting after the market closes on Wednesday. All the major earnings I think you're going to care about, all the major macroeconomic events, and then I give you the seasonality of each individual day. Tuesday, Wednesday, and Thursday, all from a seasonality standpoint, has favored the bulls. Friday, not so much, so let's hope that we make our attendees before them. And then this leads me to the final point of the video, where I want to talk about an individual stock that I've been talking about a lot, Tesla. In various videos that I've made recently, I pitched the case of why, from a price structure, price momentum, and an options flow standpoint, I believe Tesla has some good upside opportunity. Higher highs, higher lows. It's on top of the EMAs, and we see bullish action going on in the world of options. And now we have a new piece of news that I think is going to make it even better. Just in, Elon Musk says he's back to spending 24/7 at work and sleeping in conference server and factory rooms. I must be super focused on X and on Tesla. If you've been living under a rock, you probably missed the point over the past couple months where Elon got really political, even his own self-admission, spending 2 to 3 days a week in politics, as in not in his companies, such as Tesla. From an investing standpoint, especially large hedge funds, sovereign wealth funds, it does make sense of how people would not be so happy with it, because you're putting your dollars into a company that's not getting the full attention of the guy running the company. Well, now, as you can see, we're getting these new announcements that he's taking a step back from politics and once again going to putting 110% of his focus on these companies, which I believe is going to prompt a little bit more of bullish excitement on top of the fact that we already had bullish price structure, momentum, and options flow. So once again, I just want to reiterate, in the short to medium term, I'm very excited to see where Tesla could be going, but obviously I would love to hear your thoughts on that in a comment below. Overall, folks, that's what I have for you for today, and I hope you're better prepared for the upcoming trading week. If you have any questions, let me know in a comment below, and I'll catch you in the next one. Peace.